Now that we have established how effective Nemo is from a technical standpoint, let's explore the economic reality. Our venture enters a massive market. According to research from the IMARC Group, the Philippine pesticide market is valued at 29.5 billion pesos and is maintaining a steady 5.2 annual growth rate. Driven heavily by the government's mandate through the Organic Agriculture Act and stricter global export regulations regarding chemical residues, local agricultural sectors are shifting rapidly towards sustainable alternatives. Biopesticides represent the fastest growing segment in local agriculture, and Nemo is positioned perfectly to capture this demand. To capture this multi-billion peso opportunity, we have positioned our 1-liter bottle of Nemo at a highly strategic retail price of 1,250 pesos. When we benchmark this against the current market, raw and encapsulated cold-pressed nib oils retail for around 1,350 pesos per liter. On the other hand, premium synthetic chemical alternatives range anywhere from 500 pesos to 1,500 pesos per liter. At 1,250 pesos, Nemo is highly competitive, offering coconut farmers a technologically superior microencapsulated organic solution that undercuts raw, natural alternatives while sliding perfectly into their existing budgets. Our underlying financial engine is incredibly robust. By sourcing our active botanical ingredients in bulk, our complete cost of goods sold, covering formulation, packaging, and micro-encapsulation materials, is exactly 550 pesos per liter. Retailing at 1,250 pesos, this yields an exceptional gross profit of 700 pesos per bottle, giving us a 56% gross margin. This healthy baseline margin gives our business model the vital flexibility it needs to absorb operational variables while aggressively funding our marketing and early distribution channels. This strong unit profitability maps out a clear, realistic path to commercial viability over our first 3 years. In year 1, we focus on regional penetration among coconut cooperatives, aiming for 3,000 units sold to generate 3.7 million pesos in gross revenue, absorbing a minor expected market entry loss of 450,000 pesos. In year 2, distribution expands, scaling volume to 8,000 units, which drives revenue to 9.9 million pesos and achieves a positive net profit of 2.5 million pesos. By year 3, by capturing mere fraction of 1% of the total local pesticide market, we scale to 20,000 units, producing 24.9 million pesos in gross revenue and an outstanding 9 million pesos net profit. To jumpstart this financial growth, FMOS Incorporated is seeking a total seed funding requirement of 5 million pesos. We have budgeted this investment with strict corporate precision to ensure maximum return. 40% goes straight into bulk raw materials and manufacturing to lock in volume discounts. 30% is dedicated to active marketing and direct regional farm demonstrations to build trust within agriculture communities. 20% is allocated to navigate the process of securing our official fertilizer and pesticide authority registrations. Finally, 10% is preserved as an operational cash cushion. For the break-even and profit trend, month 12 concludes with an expected net loss of 450,000 pesos due to upfront regulatory hurdles and formulation setup. However, month 13 marks our official operational break-even point. This is the critical inflection point where our monthly sales volume completely catches up with our overhead cost, pushing the company from a loss into a cash flow positive position. With all initial startup expenditures officially recovered at 113, we enter year 2 and year 3 in pure unhindered profit. This timeline guarantees a full return on our partners' initial capital investment by month 24, proving that Nemo is not just a sustainable solution for coconut protection, but an incredibly safe and highly rewarding commercial opportunity. And that is all for our group speech project. Thank you for listening.